All right, welcome back. We're back here again, learning about market structure. In the last episode, we did talk about candlestick and price action, right? So we are continuing on with market structure here. More specifically, we'll be talking about trends and what it means to look at market structure, right? And we have ZJ Profits here once again, and we also have Wopa, the degenerate, um, the degenerate orb
But let's
flipper.
let's be
every
straightforward
time,
here.
Yeah,
every
yeah,
time.
guys. If you guys see this, just like listen, your charts will never look like this ever. Okay, guys, just so you know, it'll look pretty normal. But he's a G though. He prints bread, but I'll give that to him. He's a fucking G. Let's talk about market structure and what it means to look at higher lows, higher highs, lower lows, lower highs, and an accumulation range. And we have ZJ to start us off because he's already drawn everything out for us. Thank you. You're good to go. He doesn't seem to be here.
All right.
Oh, yes, he is.
No, I'm here. Sorry. I think my Wi-Fi's coming. Anyways,
Yeah, something just started bugging for us.
there are three directions wanting to see price going. Don't really want to see it go in this direction. So, when you're trading, you want to either be trading in the direction of a markup, a bullish trend, or mark down a bearish trend. Now, these can be defined by the highs that they form. So, when you see this bullish trend here, you're basically seeing higher highs, higher lows, higher highs, higher lows. So you're seeing price continually make new highs. So these highs are basically like getting disrespected, and you're seeing it continue higher. Now these markdown trends, you're basically seeing these lower lows and lower highs, which would be these lower lows, then these lower highs. And it's continuously making lower lows in the market, so it's going lower and lower. And then, last but not least, we have accumulation. And this is a trend which is not going anywhere. You're basically going sideways. You're not going any direction in the market. This is often when you're in low volume conditions or times when there is not much activity in the market. This, though, you're not seeing any higher lows or higher highs form. They basically just go in the same direction, sideways. Time goes by and nothing ever happens, is the easiest way to put it. Now, we'll explain more around accumulation because this is a very important thing to look at as well in market. But for today, we're going to be mainly focusing on markup and markdown. In this, you want to always be on the winning side of the market. So when you're seeing a markdown trend, you're going to want to be biasing towards taking shorts. You don't want to be taking longs within this scenario because the market only really wants to go lower. Therefore, you should be interested in taking shorts, betting on the market to go down. That's vice versa with markup conditions. So you'd want to be trading in the context of this trend, which is going here. And you'd want to be trying to take longs. Simple, right?
Yeah.
You'd never want to be on the losing end of the stick. You don't want to be the guy behind the losing trade. You don't want to be the loser. That's the name of the game. You want to be the winner. In short. Now, let's go down and just look at an example of a bearish trend. We could see this actually pretty perfectly here. We see accumulation, we see uptrend, and we see a downtrend. This is actually really good.
Let's show them.
It's a bit choppish,
Let's show
though.
them. Also, guys, long. We gotta really get into this with longs and shorts. Longs means buys. Okay, the same way that an options, a buy is a put, right? Pretty sure it's a put.
Yes.
And then a call will be a sell. But we don't worry about puts and calls. We don't do options. But that's just if you really want to know. But going for a long position means you are going to be buying, and going for a short position means you are going to be selling. Since we trade futures here, this is also applicable to forex if you want to. You can also trade forex here. It's the same thing pretty much. You can go either way for the market, meaning you can profit off of selling, you can profit off of buying. It's a little bit confusing, and we'll get more into it probably at the end of this video. I'll write that down to remind myself, but that's what longs and shorts mean. Okay, shorts means sell, it means down, it means you bet on the market going down, you'll make money if it goes down, and then longs is the opposite, buys. Let's continue to look at this price range right here, where we do have price moving sideways, bullish, and then bearish, and the points of reversals,
Yes.
as well as the higher highs and higher lows,
So-
lower highs,
Yes.
higher lows.
This may look a little confusing at first, but then when you're looking at the swing structure, the trend structure, which we just looked at, you're looking in the context of higher lows, higher highs.
Maybe use a circle tool, or like the circle tool will work really well because you're able to pinpoint each.
Let me use the highlight tool actually. Hold on. This is a tool I like. Here.
I've never used a highlighter. Actually.
No, this. Use it with the magnet here.
Oh, that's good.
Higher high.
I gotta start using that.
Higher low, higher high, higher low, higher high, higher low. This is a bitch top, yeah, I'm be real. Higher low,
Oh,
higher
you
high.
mark them out in different colors. Right?
You know how you
Read
could
that
like
ass.
how your view, like anyone who's watching can find high lows and high highs easy. You just go
Yes.
get to the indicators.
No,
find
no,
the fractal.
no. They need to know.
Shut up. No.
Silence yourself.
Bro, okay.
They can't.
Bro,
That's
put it
not-
on.
Bro,
Bro,
mute
bro,
yourself.
listen, listen.
The big
Listen.
Z.
Bro.
Okay, hold up.
Wait. Listen.
I had to
Dog.
mute Z. Listen, indicators are useful in trading. However, they pretend it's like you're going to the gym and you take creatine. Creatine is helpful under the conditions that you already know how to bodybuild and you are consistently doing it. You need to know these things for yourself before you have it automated for you. It's like using AI in a business or AI for anything. You must know how to do it yourself before you let AI do it for you to make sure that AI is doing it properly. That's it. And know what the AI is doing, right? Indicators are good, but use them after. We're not talking about indicators right now, all right? I'm gonna unmute Z real quick. Okay, so the indicators aren't bad. It's just that don't use them because I promise you, if you use them,
Okay.
you're not gonna make money.
Let's continue, bro. We went way off track. So we're looking at this context of a bull trend. We're looking at higher lows, higher highs. Now, what you're starting to see here is a bit of accumulation, which is that sideways price movement. We're not necessarily trying to print any higher highs here yet, but then we kind of printed a lower low, but we haven't really solidified it. And we tried to print a higher high, didn't really do that. Higher low, and this is all something we're going to look at later with everything being fractal, which we'll think about later. That's a term you don't really need to think about right now. Anyways, now we see this accumulation, then we start to see bull trend start up again. We're seeing this higher low, higher high, higher high, higher low, higher low,
use it
higher high,
in different colors.
higher low, higher high.
We gotta use this.
Shut up,
colors.
extra.
They won't understand, man.
Anyway, bro, you
just
can
stop
see I'm
talking.
saying it. Bro. Okay. Now-
You're a little shit, extra.
Dude,
What we're looking at here is accumulation once again, prior to us seeing this downtrend continue. So we're looking at sideways price action. But then, what are we seeing here? We're starting to see a bearish trend form. Now, what we're seeing is this high, this low, and then we're seeing this print a lower high, lower low. Then, this sort of print a lower high, but not really. We wicked here, they made a lower low, lower high, then lower low. This sold off pretty crazy here. Yeah. You're basically just looking at the context of these candles forming, and you're basically visualizing the directionality of everything. So, you're looking at an underlying trend. This price going up, this price going down, and then this price going sideways. I think that's all we needed for this video today. It's just very simple context.
yeah.
You want to be always on the winning side of the trade, and you want to be on the winning side of the market. That's why you want to understand market structure. Very important concept.
Thank you, CJ, for presenting all that information. I'm here to break it down on a more simplistic level as it sometimes can get pretty difficult to understand. So here we'll talk about price trends, okay? So we'll be discussing what a higher high and higher low is right here. Here we go. Here's a perfect example. Okay, let me lock this in the page. Okay, so as you can see here, we have higher highs and higher lows. So if it is an uptrend, we're going to be starting with the H first, all right? Higher high, higher low. Meaning, if we see this uptrend right here, let's talk about this guy. This will be a higher low, okay? This will be a higher high. This will be a higher low. People are literally joining my course as we're speaking. Amazing. This is a higher high, okay? Since the trend is going up. Now, let us talk about the opposite real quick before we get into anything else. We can talk about this little downtrend right here. Since we're going down, it will be an L starting, as you can see here. So this is the uptrend. This will be a higher low. This will be a higher high. Higher low, higher high. Okay? Higher low, higher high. And then right here we switch. This is a lower low. Okay? Because we've broken the market structure. We'll get to that really soon. For now, you just need to worry about trends, okay? Now, let's talk about where you're supposed to be placing these points. Is simply at the premium and discount points of the trend. The highest and lowest point. That's literally what it means. Higher high, higher low, lower high, lower low. That is it, okay? We talked about price ranging and moving sideways. So, like CJ showed you, the example was a very good example. We're going to be getting into the break of structure in the next video. I'm going to record that in a bit. Now let's talk about homework, alright? What I want you guys to do is I want you to go around on your chart on any time frame, because time is fractal. Okay, basically what that means is that all these concepts are applicable across all time frames. However, the highest time frame will always hold the most probability. Okay, highest time frame will always hold the highest probability. Oh, we can't see this. I gotta move this here. It's gonna disappear, whatever. What I want you guys to do is I want you to go around and look for trends, okay? So clearly, if you see this going up, this is an uptrend, okay? Well, my thing is white. I want you to color this. Yeah, there we go. Okay, it's up, right? You see this guy right here going down, bearish, downtrend, okay? This, technically you could say it's going bullish, then bearish. But if you look at it from the external POV, it's accumulating or ranging. For example, the range would be the top of this high to the, oops, I gotta fix this. The top of this high to the bottom of this low. This is a price range. So price ranges up and down, up and down, up and down, instead of going in a certain direction. For example, I try to take this range and put it on this guy right here, it's not really a range now, is it? Right? It's a directional bias. It's a trend. If I try to place the range here from the lowest point to the highest point and then extend it out right until it breaks out of the range, this is a range. It's not a trend. Now let's just say I tried this again, but with this point from here to here, this lower low, right, to this higher low. because it broke the structure. I'll get into that in the next video. This is a trend. So essentially, if you want to dumb it down to a point where it's the most easily understandable, go grab your rectangle tool and draw it out from point to point. If it looks like it's moving sideways, then it's ranging or accumulating. If it looks like it's moving in a direction, then it's likely to be a box that looks like it's moving in a directional bias and trending. That's it. I want you guys to go and find trends within the market. And I just want you guys to take your phone now and I want you to set a 5-minute timer. I'm not joking. 5 minutes, set the timer on your phone, put your phone facing down, and then just do it. 5 minutes. That's it. Literally close this video right now. Set that timer. I want to see you set that timer. And then once the 5 minutes is up, you can go do whatever. Watch the next video. You can go on your phone. Doesn't matter. But yeah, that's about it. That's all for the trend lines.